We're speaking now with Shane Williams. He is a president and CEO of West Red Lake, ticker WRLG on the TSXV. We'll be talking about gold, his outlook for the metal, and the equities involved with the gold sector. What's his outlook there? How can we participate as investors? What should we be looking for in terms of risk and opportunities? Welcome to the show, Shane. It's a pleasure to host you.
Thank you very much, David. It's great to be on.
We're going to be talking about some of the projects that your company, West Red Lake, currently has, and your outlook for not just your company, but also your expectations for what's next and the projects that you're working on. Let's talk about first the gold, the underlying metal behind your company, and your outlook there. You mentioned to me that we're currently in a bull market, or what's possibly one of the phases of a bull market. I'm interested to get your thesis around that, given that even though gold has had a nice run in March and early April this year, it's been in a downtrend ever since then. So why do you say we're in a bull market?
Yes, David, thank you. Yeah, look, I do believe that gold is in the early stages of a bull market. We have had some consolidation over the last number of months, but if you guide that versus the Fed have been raising interest rates over the last year and a half, and we've had the steepest rise of interest rates over the last 20 years. And as that, usually gold moves with interest rates, and it's been in a consolidation pattern. So it's holding up very well. I believe as soon as the Fed now start to pivot or start to talk about pivot, which they did recently in this week, I believe you will see gold start to move up the next leg of the cycle. And we've also had huge inflation, as you're well aware, and we've had the COVID has huge spending of M2, and all those are positive for gold. I think it's just a lagging effect, and it's only a matter of time before gold moves up to new highs.
The new highs. So let's talk about. Do you have an estimate? We'll talk about the drivers, but do you have an expectation for how high it could go?
Well, I would suspect it will definitely go through its recent high, and I would probably go up towards $3,000 an ounce, closer to $3,000 an ounce in the near term. As for the long-term price, not so. I wouldn't be comment on that at this stage.
So wait, so your short-term being what? 1 year out, 2 years out?
Yeah, probably 1 year out. 1 year.
Okay. Now, gold typically responds to not just the U.S. dollar, but real interest rates. We can comment on all these variables. So gold has an inverse relationship historically to the real interest rate, which is the nominal rate minus inflation. Are you then expecting the real interest rate to drop dramatically and thus pushing the gold price up?
Yes, I am. I believe that the Fed will reduce interest rates over a matter of time. However, inflation will stay quite high as we go forward.
Well, why would the Fed cut interest rates if inflation is high? I mean, the Fed is not going. They've announced that they want to keep fighting inflation, right? Keep at it until the job is done.
Yeah, I think there's a posture that the Fed have to make. I believe that the rate of interest rates we've seen, the high level of interest rates over time, that will be challenging for companies, businesses, corporations. We will see we're heading into the early stages of a recession. And I do expect the recession to happen into next year. And when that happens, I believe what will happen is the Fed will pause or will start to reduce interest rates back end of the year. There's lots of signs, there's lots of macro signs around that we are beginning to tether onto an early recession. And I'm a believer that we will have one. And then the Fed will have a Fed pivot at some stage, which will drive the gold price higher.
I understand. So you're projecting then, I guess, stagflation, which is, I guess, slower economic growth but high inflation.
Yes, the inflation rate, as a lot of people will say, we will have higher inflation but lower growth rate, which will lead to stagflation. Stagflation has usually been very good for gold over the years.
Historically, though, recessions are disinflationary, meaning during a recession in the past, the inflation rate has come down. What's different this time, Shane?
Yeah, I do think, as you see, there is the inflation rate is coming down short term, but we are seeing energy prices going back up, We're seeing the price of oil going back up. And I do believe as that goes forward, energy and commodities will start to rise higher the price, which will cause inflation to have another kick up. As in the 70s, you had a lot of inflation. You had it dip down, but then come back up. And I do believe we're in that sort of similar environment. It'll come down slightly, but it'll start to peak back up as the effects of oil price, etc., come back into the system.
So let's talk about this inflationary environment. What are the forces that you're seeing that could continue to maybe not drive inflation higher, but make it remain sticky?
Yeah, I do see the price of commodities are actually quite high. They're staying quite high, which is input costs for a lot of the businesses we run and with consumers. We also are having energy costs are going quite high. And I do believe those two will drive it and keep inflation at a much higher level for longer.
Does there need to be a trigger for this recession that you're projecting?
No, we're already seeing signs of early recession. We're already seeing signs of slowdown in the economy. The jobs is not increasing as good, and I don't think there'll be a trigger could happen, but I think without the trigger, you'll slowly move in towards recession over the next 6 to 8 months.
Okay, so you're expecting a Fed cut by 6 months, 8 months?
Yeah, within 6 months.
So does that mean that gold will start moving after 8 months?
No, normally what happens is as the Fed is beginning to posture, we've had a rate steady at the time for the time being, and as we move forward, I expect them to start cutting rates, which will signal to the gold market a start of a movement in the gold market, and prices begin to increase.
What's your outlook for the U.S. dollar then?
I would say the U.S. dollar is overvalued at the moment, and it will begin to. It's peaked and it's on its way down, which is helping the gold price and commodity prices.
Okay, can we elaborate on that? So what's going to continue pushing it down?
As we start to move in towards that recession and the interest rates begin to taper off, I do believe that the dollar will start to move downwards.
Shane, what's your assessment of the mining sector this year, particularly the GDX index and the smaller junior counterpart GDXJ? They've both underperformed the gold spot price this year. Why is that?
Yeah, I think it's around sentiment. We've seen the price of gold. It's still at nearly all-time highs. It's not far off all-time highs, but the equities themselves have not performed. One of the reasons I believe of that is that, the interest in gold with the rates, there's not that much interest in gold, and people are getting only into gold and are ignoring the junior mining and the seniors as well. Seniors are very undervalued and juniors are even more undervalued.
So you're saying sentiment has shifted away from the miners. Where do they go into? Other sectors in the stock market?
Yeah, there's other sectors at the moment. There's a competing against that. We've seen the rise of Bitcoin over the years. We've seen the rise of other industries, and I do believe that sentiment is moving away from the miners. We have a lot of movement into critical metals. We have a lot of talk about critical metals. The gold miners are losing interest in them at the moment, and I believe that's showing the disconnect between the price of gold and the gold miners.
Well, what needs to happen first before we see more interest back into the miners? Is it the price of gold moving, or something has to happen in the industry? More M&A activity, perhaps?
I would say it's the price of gold. Price of gold, as soon as you see the price of gold rise above its previous high, I do expect that will be a movement of the junior miners and that re-rating for all the miners.
If an investor were to say to you then, Shane, if a recession is coming sometime next year, wouldn't you be concerned about the prices of all stocks being pulled down by the recession? Or do you think gold companies in particular are immune?
No. As you saw in the COVID period, when you get that kind of recession, gold comes down like everything else, but gold quickly rebounds. The price of gold quickly rebounds, and with that comes the re-rating of the miners, etc. over time.
I'd like to learn a bit more about your company. WRLG is the ticker. Tell us about the two projects that you have, the jurisdictions they're operating in, and why you picked those jurisdictions.
Yeah, I think one of the reasons we saw with the long-term proposed rise of gold prices, there's a lot of leverage as you develop a gold miner in that rising price. And so one of the reasons we went to the region, we went to a region of the Red Lake region in Northern Ontario. It's known for its very, very high grade deposits, and it's known for its ease of operation from a permitting perspective, and ease of doing business in a mining perspective. So that made us focus on the Red Lake region. We have two projects there called the Rowan project. We also have another project called the Madsen project.
Okay, can you give us a sense of the scale of these projects, how many ounces you have in your deposits, and an update on the operations?
Yeah, so we have two properties. The Rowan property has around 800,000 ounces of gold at an average grade of 9 grams, so it's high-grade deposit. The Madsen project has just over 2 million ounces of indicated and inferred at around 6.5 grams material. So together, the bottom, just over 3 million ounces of high grade in the Red Lake region.
And you're currently drilling, is that correct?
Yeah, we're currently drilling on the Rowan property at the moment, and we're just about to go underground at the Madsen project and start drilling there at the moment.
And we'll talk a little bit more about these deposits, but long term, what is your long-term vision for West Red Lake? Is it are you trying to exit with a buyout, or are you trying to build these into production?
No, the long-term goal is to get the Madsen project and the Rowan property into production. When we bought the Madsen project, it has a mill, a mine, facilities. It's an operation mine. So the idea is to build a hub and spoke model within the Red Lake region and feed them into a centralized mill and then grow into operations. That is and use that as a leverage to grow and build a mining company. Our long-term strategy is to build an intermediate gold mining company in Canada.
Okay, and are you planning to do this, by yourself, or are you trying to have a strategic partner with the production process?
No. We will do this by ourselves. We're backed. We have very good financial backers. We have a good team in place, and we believe we have the ability to leverage this up and build this project out.
Would you say it's more or less difficult in today's environment to raise capital than, let's say, pre-pandemic?
Yeah, it is quite difficult. As you mentioned, sentiment is quite low at the moment in the junior mining space, and so it is quite difficult. I just came back from Denver Gold Show and from the Beaver Creek Precious Metals Summit. Sentiment was pretty low. A lot of people looking for money, but I think our group, the focus of the group and the way we're set up with the financial backing gives us that ability to go out and raise money in these difficult times.
So you recently had a $350 million deal in existing infrastructure. Is that correct? Can you tell us about that?
Yeah, so the previous operators had a mine in place. It was in commercial production. They've spent over $350 million on the project. So there's a brand new operating mill, there's underground development, there's tailings facility, there's a permit in place. It was in production. And that process, the operators had some challenges. That went into the CCA process. And then we made a deal together with them, and we bought all that package for about $6.5 million in cash and some 40 million shares of equity in with that, and an 1% NSR. So we got the deal really for pennies on the dollar, effectively. That was being spent on the previous operation.
Okay, and can you comment on other key people involved in West Red Lake?
Yeah, so part of the focus of the team was to put together a very technical and capable team. As I talked to you about our ability to go and build a mine and then grow from there. So we've put on some key people on the board. One your listeners will probably know is Tony McCooch, who over the years have built a company called Kirk and Lake, very successful. It was sold to Agnico Eagle. We also have Duncan Middlemass, who's known for Wesdome Mining, and Hugh Agro, who worked with Kinross. So we brought on some serious people who are good, who know company building and have done successfully building companies to path the course for West Red Lake.
Well, can you walk us through the history of the projects so far? How long have you been drilling? How long have the projects been under your management?
So we just did the transaction in June of this year. So it's reasonably new. However, prior to that, we had the transaction of the Rowan property earlier in the year. So we've been drilling the Rowan property for most of this year. We have results out on the website. On our website, we've had some very successful high-grade intercepts. In June, we did finalize the transaction for the Madsen property. We're just getting back underground now to do some development, and in about a month's time, we'll be starting to do some underground drilling on the property.
Okay. Have you considered adding other projects to your portfolio?
Not at this stage. It's very early stage. We need to get in and move forward this project and our Rowan property and get those up and running. And then we look at increasing our inventory within the area. Because we have the existing mill, we really have the only mill in the area. So that gives us the opportunity to leverage onto other deposits in the area to feed into a centralized mill.
Tell us about your background, your professional background, and how you got involved with West Red Lake.
Yeah, my background is 25 years of operations and project development experience. Um, Prior to this, I was with a company called Skeena Resources, who some of your viewers might know the SK Creek project in northern BC. I was the COO for Skeena for a number of years. And prior to that, I was with a company called Eldorado Gold and worked all over building and operating their mines. Worked in Turkey, worked in Greece, and the Lamaque project in Val d'Or in Quebec. We brought that into production in an 18-month period. So very technical, very mine operations and mine building. Got involved in the project earlier this year with the group and did I did a lot of due diligence on the operation, what happened previous, how it went about, how it came about to go into the CCA process. So I have a good understanding of the background and the issue, and then came in as the CEO to take the company forward.
Yeah, you've also worked at Rio Tinto, massive companies. So can you just comment on your experiences, how working for a large producing company is different versus a junior explorer from the exploration front? In other words, are there major differences in the philosophies and approach of a large company drilling for exploration versus a small junior company drilling for exploration?
Yeah, I think it's got to do with the agility. Large companies have very big budgets, very structured approach, where they're going to, target, how they're going to go about that, how they set it up. The juniors, you have to raise money, you have to go about it, you have to be very focused on where you're drilling, and you have to be also agile to be able to move very quickly as the market dictates and also as you have results. So it's that agility and that ability to pivot and move depending on markets is something very different for the juniors versus the seniors.
Previously, as I mentioned, you worked at Rio Tinto. Why did you transition from base metals and iron ore into precious metals?
Yeah, so my background is really project development. It's development projects from early stage. I enjoy the process of from early stage exploration all the way through to operations. I've done this in a number of commodities: iron ore, copper, base metals, gold. So I've transitioned into gold in the last number of years with Eldorado Gold and Skeena Resources and now West Red Lake. I do believe in gold. I'm a big macro bull on gold. And so I like the opportunity that gold affords us as we develop that mine forward.
I'm going to ask you one final question. Feel free not to answer it if you're not comfortable with it. But if a large mining company were to approach you today, like today or tomorrow, Shane, said, we'd like to take you out, what is a valuation that you're comfortable with?
So I want to discuss the actual number, but at this stage, we don't want to be taken over. We believe there's a lot of value that needs to be brought to the company and our shareholders, and we have a long way to go before we can even entertain an acquisition from another operator. Our market cap today is only 100 million. Similar companies with a production profile of what we expect are north of $1 billion today in Canada. Wesdome Mining is an example. They produce 100 to 150,000 ounce production. They're valued at just over $1 billion market cap. We're at 100. We have a long way to go before we feel the full value of this asset can be realized.
If your shareholders were to say to you, Shane, well, that sounds promising, but I'm impatient. I'd rather you position yourself for a takeover versus waiting many years before you get into production. How would you respond to that?
I would say that I would look at the valuation question. We've just got going. We've just started the company. We're less than 8 months old as a company. We've just started. We've just put our team together. We're just getting in on work. So there's been very little work done it yet today to uncover that value. So I would argue on the valuation perspective, for a lot of them have only put in money recently, so there's no upside for them so far. The upside will come later as they follow the journey.
Okay, very good. Where can we learn more about your work and West Red Lake?
Yeah, we have a website, westredlakegold.com, and you probably shared in the link at the bottom of the report. On that page, we have all our information, our reports, technical reports. There's a lot of good videos, media. We just had a very good site visit. There's a good media video, which really shows the scale of the project and what we bought. It was a really great acquisition for buying that full asset for $6.5 million. We have all our drill results there. Investors can sign up and follow the journey as we go forward. As I said, we're on the TSXV, WRLG, and we're also on the OTCQB.
All right. Well, thank you very much. I appreciate your time, Shane. Make sure to follow West Red Lake and the links down below and learn more about their projects. Thank you again for coming on the show, Shane. Appreciate it.
Excellent. Thank you very much, David. It's a pleasure.
Pleasure to host you, and thank you for watching. Don't forget to like and subscribe.